on Business Incorporated today. Poultry Association of Nigeria laments egg glut in the country. And 90 illegal miners arrested in Ethiopia. Talks on ways to resolve border crisis between Kenya and Ethiopia begin. Happy holidays to you. Welcome to the final episode of Business Incorporated for this week. I'm Amy John Mekwa. Well, just before we go for that rest, let's do business, at least a little bit of it. We're starting, even though the markets are closed, we do a summary of the NGX, that's Nigeria Stock Exchange, today, and we see that a loss of 674 billion naira is what was recorded in the first week of April for Nigeria's stock market, and this signals gloom for the second quarter. And the equity market loss of 674 billion naira recorded in the first trading week of the second quarter is a signal that the market may experience mixed sentiment during the second quarter. And this is in spite of the fact that the equities market closed the first quarter, that's ended March the 31st, in the green territory, with the NGX all share appreciating by 5.8% to close at 54,232.34 index points. Market operators have expressed mixed feelings about the outcome of the market activities in the second quarter of the year, following current political uncertainties and other economic headwinds. The rising inflation, interest rate hike, Naira redesign, just getting out of the Naira crunch, and above all, the dispute at the 2023 general election are key factors expected to further dampen market confidence in the nation's local bourse. Contrary to expectations that investors would increase their buying pressures in hope of impressive full-year 2022 corporate earnings result, the equity market witnessed selling pressure during the first week of trading sessions and the first month of the second quarter. The domestic bourse sustained the long losing streak, bringing the benchmark down by 2.28% to close at 52,994.13. Well, let's have Abdul Rashid Momo join us now and see expectations, if he accepts this prediction for the second quarter, that to be a gloomy one. He shares his thoughts with us. Good afternoon, Mr. Momo, and happy holidays to you.
Thank you. Happy holiday. Can you hear me?
Yes, I can hear you. So, did you see this coming? You know, you always have your graph that you look at and predicts the future of the market. Did you see that we will end the first quarter in the negative?
Yeah. The truth is that the divergence has been there, which has always been a bearish divergence, that it was going to come. I think I said it too early. The market was there was still strength in the market. But now, as you can see, there's so much weakness across the board. What was holding the market then was more of anticipated dividend payouts coming, and we've seen what most of the companies have done so far. They've done very well. Despite all the harsh economic indices, they've done very well. Example, what was one of my criteria is Zenith is always among the first to bring out their financials. If Zenith brings out the financials and dividend is paid and the price didn't move, then I didn't see any other banking sector, especially, that was going to move. Basically, most of them up their dividend payouts, but no movement. The market has already priced in this, and likely there's still people that we're still going to see a drop in the market. Market needs this correction. It's a normal phenomenon, and people always feel the market has to go up all the time. There are times when the bulls need to take a rest and the bears take over. So you should just breeze up for the bears to do the correction before we go into the market again.
All right, everybody needs some rest. Well, know, there was a lot of uncertainty because of the election, among other things. Of course, we had the redesign policy, the Naira redesign policy also affecting that. But now that it seems things maybe getting back to normal. We know that when it comes to the election, we have the courts getting very busy now. But I mean, the cash crunch, we've started seeing cash, even though it's not the new cash, and we don't know what's going to happen by December when the old cash is supposed to be illegal. But does it look like the dust has settled and investors can now take a more certain stance and decision?
Well, I always run back to my chart. Really, the period of April, I think from next month, or begins the end of a lot of these companies are going to be paying their dividends. And I've noticed a certain pattern that happens. When those dividends are paid out, you see some correction more to the downside before the uptrend. Like example, look at the history of most of the banks. Anytime there's a markdown, they lose at least 1 to 2 naira downward before now see an uptrend. And what happens again, even when the uptrend comes in, they fail to break the last highs of what they've done over the years. So I think the market, we are still going to see more of even though we see an uptrend, as long as those levels are not broken, the market will be trading what they call lower highs. The bull will still be there, but the market is not going to recover for now. As I said, most of the things that have happened over the months, the Naira redesigns and everything, the market has already priced in most of these things. And at times, it might be a discounting mechanism, or later the market reacts to it when you don't really expect it to react. You can imagine all that period we had issues of fuel scarcity and the market did not react. The market was still very strong. But now that things have settled, we are beginning to see another stage of the market. You know, people, we don't understand these things most of the time, but that is the reality of life. When you expect the market to actually react, it doesn't. But for now, I've told you during the trend-wise, anytime those companies pay, there's always a 1 naira, 2 naira loss before we see any recovery.
Then in this first quarter, we saw that Ghana Euro bond, and a lot of questions have been, how impactful has that been, especially to the banking counter here in Nigeria, or how exposed have the banks been that could affect their earnings and their sustenance, you know, in Nigeria?
Last time I told you about some bank. I didn't call them. I said some of our banks were exposed to that Ghana Euro bond, and but that I had a feeling that the smart money will actually pay good dividends, which you have seen. I think that thing is going to, apart from we saw what I think was it Zenith, what they announced in terms of profit after tax. They must have so far. I think I won't use the word growth of. You see the profit they made at the end of the year, even before that, the profit before tax and profit after tax, there was a huge margin in terms of before then. After that was about 1.something%. So I think it's actually going to tell, no matter what, it's going to tell on your financials at the end of the day. Well, but anyway we see it, they always have a way of survival, because I think most of them still have a very, very strong cash reserves at the end of the day. So no matter how it is, it's going to affect them, but I know they will survive.
Okay, we'll all survive. So what? When
the Ghana bonds actually sort itself out, I know they'll pay. It's just a question of time.
Yeah, maybe that $3 billion bailout from IMF will help them pay that. But I mean, just briefly now, what do you see at the end of the second quarter? Another bullish or bearish run? Will the bull be taking a rest again?
Not one thing. The market actually has an average of, in terms of, let us be sincere, the market historically has an average of, let's say, about 4,000 points give or take. That's a good rally on a good day. But so far, the market has taken about, I'm talking about from 43,000 points to a max of about 55,000 points. That's huge. That's really huge. So if we want to be fair for the bear at least, the market needs to reach about, at least about, let's say, 50,000 points.
Mr. Momo, that's not fair. We don't want that. We don't want to play it fair. We don't want 50,000.
When things go too high, they need to calm down. The market doesn't go up all the time. There needs to be corrections. As it is now, the market is trending within a support level. When I mean support, we're looking at in February, the market hit a low of 53,804. In March, it hit 53,124. So as at today's close now, I've drawn a line, and the line is actually within a support level. That is lower lows. The market is actually trading lower lows and lower highs. So even if we'll see a rally to the upside, if you say right to the upside, we're looking at what's the best about 54,200. But the market is thinning down in the sense that we are seeing lower highs and lower lows.
All right.
But any breakout within up and down is going to be major.
All right, Mr. Momo, thank you so much for sharing your perspective with us, even though you were not working today and not trading. Thank you for your time. We appreciate it.
Thank you very much. Okay, have a nice day.
You too.
Okay.
All right, let's move to the Middle East now, where only two of the markets that we follow open. We have Abu Dhabi open, and it's in the negative 0.10%. Dubai also in the negative 0.10%. However, for Saudi Arabia, it closed yesterday in the negative too, 0.13%, as well as Qatari also in the negative. We go to Europe now, where for the second time this week, we have another company answering questions. Electric car maker Tesla may have some explaining to do. A report shows that employees shared embarrassing videos of customers in their cars recorded by onboard camera. Wow. Well, Lars Holter is in Berlin, and thank God he's not on holiday, and he joins us to tell us more. Hi, Lars. Good afternoon. So what is this all about? What's going on, really?
Yes, it was quite embarrassing for some indeed. One video shows a man approaching his vehicle completely naked. Other videos show intimate situations between passengers in cars. And then there's some videos showing road rage and even a terrifying accident where someone hit a child on a bike. So some of these videos have been recorded in traffic situations. Others were just recorded as Tesla vehicles were parked and their onboard cameras were on. And despite its data privacy policies stating that all data would be completely anonymous, many of those videos were circulated within Tesla's offices, some even turned into memes, and many of them featuring data on the exact location, which means they were not so anonymous after all and could easily be traced back to a customer.
Really embarrassing indeed, but why the recordings in the first place?
There is indeed a good reason why Tesla cars record so much. All recordings are technically supposed to be used by programmers to improve Tesla's autonomous driving feature. So here's how that works. The videos go to Tesla contractors, many, by the way, working in Africa, but also some in the US. The videos are analyzed there, and they are marked for traffic signs, for pedestrians, other features, and all, of course, with one aim: to teach the AI, the artificial intelligence, to read real-life traffic better and more reliably. And obviously that is important to eventually develop autonomous cars that can safely drive on the streets. But obviously it has to be handled in a better way.
Obviously, because those are embarrassing situations. But okay, we know the markets are on break for Easter. What are investors doing at this time?
Well, some somber news for the long Easter weekend. The International Monetary Fund has given a bit of an outlook, and it expects only low economic growth in the next few years, despite a strong labor market. That's according to Managing Director Kristalina Georgieva in Washington. She even says that, quote, growth remains historically weak now and in the medium term. Also, growth is very unevenly distributed for the time being. India and China will likely account for half of this year's global growth. Across the board, growth is slowing in 90% of industrialized countries, including in the Eurozone. More details on all the economic regions in the world will be in the IMF's full report, and that is due out next Tuesday. So over the Easter break, investors can place their bets.
All right. Yeah, bets indeed. Thank you so much, Lars, and enjoy the Easter holiday. Okay, so let's go to the United States. And as we know, of course, the market there is closed. But we'll always take some steps back and look at the day before. So tech stocks lifted the S&P 500 into the green on Thursday as the market wrapped up the short trading week on a high note, despite signs of a weakening labor market. S&P rose and other tech-heavy Nasdaq. But let's have Maria Bird now. She has the details to give us about how the market traded on Thursday and how it closed.
The U.S. stock market marched upward on Thursday as the Dow Jones was slightly up at 0.01% up, the S&P 500 up by 0.4%, and the heavy tech Nasdaq up by 0.8%. Many investors are expecting the labor markets to cool as the Friday jobs report is expected to show a reduction in the number of job openings. It is also clear that investors are expecting that the increase in unemployment rates that was unexpected for the month of March will also show the labor markets are cooling down. Even though it's a fine balance between ensuring that people are employed and the economy, it is clear that these labor market cool downs could potentially slow down the rate of interest rate hikes.
And that takes us to the break, the first one for the program. Well, the only one there. So we'll come back after the break and we'll have more stories for you on the other side of Business Incorporated. So stay with us. Welcome back. You're still watching Business Incorporated here on Channels Television. Let's go to Ethiopia, where Security and Intelligence Joint Task Force announced detaining more than 90 foreign nationals and their local associates for allegedly engaging in illegal exploitation of gold and other minerals. And the foreign nationals are suspected of entering Ethiopia illegally and engaging in the illegal activities of mining together with their local associates, who are also named in the statement that was released. Accordingly, the task force has said that 45 nationals who entered Ethiopia without valid travel documents, entry visas, and resident permits were detained, along with 3 Ethiopians for allegedly engaging in illegal exploration of gold and various minerals in some of the regions. There were 47 unnamed foreign nationals who entered Ethiopia without valid travel documents, entry visas, and resident permits, and they're suspected of engaging in illegal gold exploitation and production of other minerals in parts of Ethiopia. And in Nigeria, as inflation continues to bite globally and the impact of Nigeria's cash crunch gradually subsides, there are indications that prices of chicken and other poultry products might soon go beyond the reach of average Nigerians, as farmers are struggling to break through. According to the chairman of Poultry Association of Nigeria in Ogun State, Mr. Ido Ashenuga, there is a glut of eggs in the country currently. He was a guest on Business Morning earlier today.
90% of our product is sold by the, peasant retailer on the streets, at the corner of the streets, So they don't do POS. They don't even know how to operate it. Some of them don't even have bank accounts. So if you're buying 6 pieces of eggs, for instance, you're going to use cash. If you're buying even a tray, you're going to use cash. So the informal sector, where our business marketing is, domicile, is driven by cash. So even Nigerians that could afford to buy eggs, some months ago, they didn't have the cash. We were almost at zero cash availability in February and the takeoff in March before the Supreme Court judgment that forced the CBN to reverse their policy. So these has created a glut, in our business. And right now we have about 15 million trays of eggs, stockpiled with farmers that they can't just sell. The peak of our business traditionally is January, February, and March. Okay, but then this year the disruption came, and then while we were trying to enjoy that good pricing, everything dipped. If somebody came to my farm yesterday and wanted to buy a tray of egg for 1,300, and then don't forget that in Nigeria, unfortunately, there's no price control. So the retailers still remains like the gatekeepers, because you as the consumer, you're still buying one egg for 100 naira. Even the reduction at the farm gate is not translating to the consumers.
So from Nigeria to Zimbabwe, where yesterday we did tell you the story of US dollars were mostly utilized. In fact, it's used for 77% of transactions this year. And in first quarter, that surpasses the proportion that were conducted in the local currency for the first time since it was reintroduced in June 2019. The Zimbabwean dollar was abolished in 2009, replaced mainly by the US dollar after an episode of hyperinflation rendered it worthless. It was reintroduced in an attempt to revive the stagnation in the economy. So is Zimbabwe heading back to that route? We have George Nsumba, a senior reporter, joining us now to paint the picture for us and tell us how it's really happening back there in Zimbabwe. Hi, George. Good afternoon.
Good afternoon. How are you?
I'm great. Thank you for joining us. So how readily available and accessible is the US dollar on the streets of Zimbabwe?
The US dollar, you can literally buy a tomato with US dollars. It's the prevailing currency. It's the currency which is used mainly, and it is causing a lot of trepidation for the authority to say, how can we increase confidence in the Zimbabwe dollar so that people use the Zimbabwe dollar more than the US dollar? So it's becoming very difficult to move the consumer away from using the US dollar, and this is causing instability for the local currency. There's a lack of confidence among the consumers across the board, with people opting to use the US dollar as a value, as a store of value. If a contractor gets a contract with government to build a road, and the government pays them in Zim dollar, the contractor rushes immediately to the black market, the parallel market, to buy US dollars. And this pushes the rate of the US dollar up and devalues the Zim dollar. So this is a quandary that Zimbabwe finds itself in.
So I'm just trying to understand how you mentioned tomatoes, for instance. How is that going to be priced in the dollar when it's being produced in Zimbabwe by the locals? How do they do the pricing of locally produced commodities?
Yes, there is what we call the the black market rate, the parallel market rate, where people wake up and they say $1 is worth, for instance, I think it is 1,500 Zimbabwe dollars. So there is always that parallel market activity. So if I'm going to buy tomatoes, for instance, and they charge them in Zimbabwe dollars, they will now calculate using that rate, that parallel market rate, to say this is worth this much. So for $1, I'll probably get 20 tomatoes, for instance, a bunch of tomatoes. We don't have small change. So each dollar has, for instance, 1,600 Zimbabwe dollars. So you get 1,600 worth of products from tomatoes, for instance.
Yeah, well, doesn't paint a very pleasant picture there for Zimbabweans and residents there, because it sounds like the economy might be heading to another hyperinflation. But we'll stay on this story, George. Thank you so much for sharing this with us, and we hope you'll be available when we call you again to get updates.
Thank you very much. You're welcome.
All right, finally on the program tonight, leaders and elders from pastoral communities in Kenya and Ethiopia have embarked on talks to end incessant cross-border conflict. Elders from Turkana and Ethiopia's Desanach and Atom said that conflicts along the common border have resulted in the loss of lives and livestock. Through their leaders, the warring communities held a two-day meeting in Londwa, where they agreed on the use of local mechanisms to address their issues. Lori Kukata, the head of Ethiopian delegation, attributed the perennial conflict to scramble for pasture and water for livestock, and from the two countries for formulating a working formula and homegrown model that will resolve the conflicts. We do wish them the very best, the struggle for the limited natural resources. So we also see it here in Nigeria. We have the farmers and the herdsmen clash. But we wish them all the best, and we hope to get through it. That's it for Business Incorporated today. Thank you so much for being a part of it this week. We appreciate your time. Let's do it again next week. I'm Ini John Mekwa. Enjoy your holidays.